Money day, guys and girls. I hope you lot are blessed. Welcome back to another Market Mondays episode 3. Now, in this episode, I'm going to explain to you guys just how well the last 2 Market Mondays have done. We've had a load of trades that have finally played out, and it's really testimonial for the fact that patience is key. Sometimes you will approach the markets thinking that there's a trade to be taken, and there actually isn't. And because of that, you have to understand that you're not always going to have a trade. You're not always going to have an opportunity to get into the market. Sometimes the opportunity was last week, it was yesterday. And based on that, when you're in that trade, sometimes you need to sit in that trade for quite some time because you may not get another entry. Now, with that being said, it's really important to understand that right now, based off of the last previous videos that I've shown you guys, there is a lot of fundamental factors taken into place. We've had the Japanese yen finally increase their interest rate. This has not been done for over 30 years. So I'm going to be breaking down the progress that we're seeing with the yen. I'm going to break down what the interest rate decision done yesterday, and also this is the reason why Market Mondays is late. I wanted to wait to see what happens with the interest rate, which took place around 4:30 a.m. in the morning. Of course, I am situated here in Dubai, so it means I need to wait until later on in the evening sometimes to wait for the markets to really start flowing. But if you guys are watching this video on YouTube right now, of course, as always, please do like, share, comment, subscribe. But I also want to say to you guys, if you go down below in the description box, you guys can get access to my free Telegram channel. Now, inside of this Telegram channel, I'm going to give you access to live Q&As that I do with my team, but I'm also going to give you guys access to not just education, but signals as well. And if you guys are if you're someone that's been involved in trading, you don't know where to go, you need to improve your strategy, or someone that's actually got involved but never really followed it through, then look no further. You're here in the right place, you're learning with Vel, so let's get into this. Okay, so as always, we are going to check out the economic calendar. But as we come over to investing.com, for those of you who don't use investing.com, some of you might use Forex Factory or some other websites, you know, my FX book. I like to use investing.com because it gives you a global generalization of finance. Okay, you can see here we've got Nvidia news, top US congressional Republican Democrat says deal reached on whatever it's talking about. Fed meeting preview. Here's what 5 strategists have to say. US stocks slipped marginally amid caution ahead of Fed gathering. Okay, so there's a ton of different news that you can see here from investing.com. I don't have any type of any type of partnership or affiliation with investing.com, but I think they're really cool, really handy to use. So I'm gonna go over to the economic calendar. Now, I've just recently broken my fast, so you might see me drinking a lot of water throughout this video, guys. Now, what we want to talk about is the interest rates that we saw today. We had the Aussie interest rate, which remained the same. The previous was 4.35%, and the rate that they released was the same, 4.35%. But the most interesting factor here is that the Japanese yen interest rate for the past, okay, let's see if we can actually see it on here, okay? For the past 20, 30 years, I want to say 30 years, could be a bit longer, we have seen negative interest rates, okay? Show more, let's see if we can see here. So you can see here, interest rates have just been negative, look, okay? The previous has been their forecast has always been 0.10. They've never changed it. I'm not going to go down 10 years back, but we can see if we go back down to 2018, we're still seeing a minus 0.10 interest rate. Okay, and for the first time in over 30 years, they have changed this interest rate, ladies and gentlemen. They've changed it. So what does that mean? That means investors, okay, who are putting their money into areas that can provide them with a good return would potentially be looking at Japan. Why? Because the Japanese economy is stable. Okay, if you notice, their interest rate never changed over 30 years. It didn't go minus 10, minus 0.7, minus 0.12, minus 0.50. It just stayed flat, 0.10, minus 0.10, excuse me, for over 2 decades. Okay, so now that the interest rate has gone up, this will have a knock-on effect. Now, of course, all of the other countries will have something to say about this. You've got the US, of course, they will have something to say. Every country will have something to say, because now essentially what's happening here is the Japanese yen is going to be competing for foreign investment. So because the Japanese yen is going to be competing, its competitors like the United States is going to be pretty much bad mouthing the Japanese yen. They're not going to try to install any confidence in a rival currency, because they want all the business for themselves. Does that make sense? So from that being said, I also want to tell you guys that the job of and this is where it's kind of messed up, right? The job of a central bank is to keep their country's currency value low. I've told you this before, guys, on videos. I'll tell you again. If the value of a currency is low, then that actually provokes foreign investment at a high scale. Okay, if you guys are from UK, wherever you may be from in the world, I'm from UK. So when I used to live in UK and I would visit Spain, for example, once upon a time you could change up £1,000 and get back 1,400 euros. Okay, that was because the value of the Spanish euro, the value of the euro, was low. Okay, which would mean that people like myself, in some cases, would actually appreciate going to countries like that, because we get more value for money. We'd build businesses there because we would get more value for money. But on the flip side, when your country's currency is low, if you live in Europe and now you're trying to travel to UK, for example, things would feel like it's 2 times more expensive, because you're getting less value for money. So when the interest rate is low, that isn't necessarily a bad thing from a foreign investment perspective, because that means their repayments are low. Okay, if they was to get a £1 billion investment, the repayment plan would be low. Okay, but for consumers that live inside of the country, of course, a low interest rate doesn't help them. So it's a double-edged sword. When the interest rate is high, it's good for people that are saving, but it's bad for lenders. Okay, if you're borrowing money from the bank and the interest rate is high, that means you've got higher repayments, right? If you've got a mortgage, you've got higher repayments. If the interest rate is low, you've got lower repayments, but it also means that you make less money if you're saving money too. So with that being said, I want to head over to the charts, because the Japanese yen is of course something that is very important for us to understand the dominance that it can potentially have within the next 6 months. Now look, guys, this is the first time they've increased their interest rate. We need to wait now till next month when we see the next interest rate, and so on and so on. But I'm pretty confident that if they've just increased their interest rate to 0.10, they're probably not going to go back to their old ways next month. Okay, so this brings me over to the charts, and I want to show you guys the JPY basket. Now, if you guys have watched the previous Market Monday episodes, you guys will know this is the cheat code which a lot of you probably would have never have heard of before. Okay, but the Japanese yen basket is pretty much like the DXY. If you're watching this video for the first time on my channel, the Japanese yen basket is a cheat code. This is going to give you the strength, or it's also going to give you the weakness of the currency, which is going to enable you to form a bias. Now, I don't trade the Japanese basket, but I do make analysis. If you guys can remember, from this pullback here, we had a buy on a Monday on the 4th of March when the month just started, and we saw this buy up till here, and we wanted to target this area for a couple of reasons. One, it was a daily candle. 2, we also had our Fibonacci showed us this was an area where we would initially take profit from. Okay, but what happened was price got to this area, it reacted, and it's come down lower. So we know why this has made a new low. Okay, it's pushed up to make a lower high, and it's coming down, and now it's potentially going to be making a new lower low. But we can see why this happened, guys, right? We can see why this happened, and also the interest rate today has resulted in this push further down. Now you might think, Cavell, the interest rate was positive, so why would this result in a negative response on the markets? Well, what happens is, guys, when rates come out, okay, an interest rate will come out followed by a press conference, followed by a speech, right? And it's not necessarily the interest rate that could give the strength or the weakness. It's actually what the chairman of that central bank is going to talk about. Okay, it's about how confident they come across in their press conference talking about their country. What are their targets to tackle inflation, to tackle unemployment? All of these things become important because the reality of forming a bias, okay, or forming a bias of being confident or unconfident with a currency is based on what what their chairman is saying. What are they saying? Okay, what's the next steps? Where is the plan of action here? And what's happened is the United States have had a bit too much to say, and ultimately, guys, the markets probably haven't known how to react. Even though this was suspected that they would raise the rates, okay, you have to understand that we've had a rally up. Okay, we've been having a rally up towards this rate, and today the rates come out and prices push down lower. It could come down and make a new lower low, but I'm very optimistic about the Japanese yen for the foreseeable future. Okay, I don't think the Japanese yen is going to be something that investors aren't going to look into, but for the short-term effects right now, I don't believe that the result today has had an effect on the markets. Okay, because it's a big thing. Just because the rates has changed, it doesn't mean now the yen, every investor's going to crowd their money into it, because interest rates are still a lot higher. I mean, we've already seen, okay, Australian dollar's got a 4.35 interest rate. So we can understand that even though the yen has now increased their interest rate, that doesn't mean that they've changed the game dramatically. Yes, it means that they've broken their, historical tradition, but it doesn't now make them the favorites, okay? And what's important here, guys, is we've understood from a fundamental perspective why there was going to be strength. Okay, and we also lined that up with the technicals to also now, with the technicals, being able to see why we would also look at the Japanese yen becoming weaker. And so we have done. So based off of this, guys, this move downwards was actually one of the cleanest moves that we had when it came to USD JPY. If you guys go back to the Market Mondays episode 1, I believe, or 2, okay, there's only 2, so you don't really have to go back too far. But if you check out the previous Market Mondays, what you'll notice is that we had this buy off of this weekly structure level, which was also sitting inside of this daily candle, which was also a beautiful Fibonacci retracement. We had 3+ reasons to get into this trade, guys, and we've now just cleared the high. We've taken some of the liquidity. This is over 370 pips, okay? This move has been clean. It's taken its time. It's taken over the past week, okay? But I need you to understand, this trade was based off of a higher time frame. So when you take trades off of a higher time frame, you need to give your stop loss, you need to give your whole outlook on this trade a complete different perspective. Usually I trade at a stop loss at 35 pips for USD, for any Forex pairs. But from trading on a higher time frame such as the daily, then I need to understand how significant is 35 pips. Now, when you look at the stop loss here, you can see that we have 61 pips. So it's almost just under double the amount that we would have off of a normal intraday trading, or normal intraday trade. But what we can see here is over this daily, okay, which has now gone over the past week, we can see, guys, that we're still making a 6-to-1 risk to reward here. This trade is still phenomenal, but this trade has come from understanding what's happening in the markets, the financial markets, and then understanding technically what we're seeing here. We've seen a significant level of structure, guys. I've gone onto the weekly time frame, I believe it was. On the weekly time frame, I've gone onto the line graph, and I've gone back. Okay, I've gone back weeks and weeks and weeks and weeks and weeks, and what I've been able to see here, guys, maybe I was even on the daily. No, it was definitely the weekly here. So we can see here we've had price coming close. It hasn't touched it, but if we go into the line, the candle chart, price has probably wicked it, as we can see over here, over here, over here, and over here. So this became a significant level of structure, which actually lined up with our Fibonacci and also lined up with a daily candle that we could see, which gave us a reason to buy. So we are now on the way to the upside, okay, to the upper room. Shout out Ned if you're watching this, the upper room. And with that being said, the 34-year high is going to be very significant. Are we going to break it? Are we not? I don't know. I don't see the Japanese yen staying weak for too long, but there's also a lot of factors taking place this year, with the United States. There's the elections. Donald Trump might come back into the house. If Donald Trump comes back into the house, I genuinely think that the dollar is going to be very strong, because from a business perspective, Donald Trump is very astute. He is probably the only person that can recover and sort out the global debt situation, or should I say the global debt situation that the United States has. So This is the reason why we bought the Japanese yen, the the US dollar, Japanese yen. This is why we bought it, because we understood what was happening fundamentally, and technically there was reasons for us to see it. They both matched up. If without one, okay, it's hard to see the other. Because without one, if we don't find out the fundamental information, maybe we think like retail traders. Maybe we think price is going to continue coming down lower. So with that being said, I want to, battery's gonna die. With that being said, guys, what I want to do is I want to go over to the next pair, and what I'm going to show you guys now is actually the USD. In fact, no, I will show you. So I've shown you USD JPY. This is the reason why Euro JPY would also be pushing higher. Do I have an AUD JPY? These pairs would all be pushing higher now, based off the fact, okay, that the yen has grown incredibly weak, which has given a chance for these other currencies. We also had the Australian interest rate, which of course remained the same, which would have been positive. Because it's remained the same, that is also something now which has breeded more consistency, more confidence, okay? The yen has changed their interest rate, which they haven't done over 30 years. Investors right now might be thinking, well, what's gonna happen next? That is not showing any levels of confidence. You changing your interest rate from what you usually have it, for what you've had it over the past 30 years, that could make some people worry, okay? So I want to show you guys the peso, okay? Shout out my peso traders. Guys, if you're not trading this peso, you're missing out, okay? If you're watching this right now on YouTube, wherever you are, whoever sent you this video, guys, we have just cleaned up over 2,400 pips on the US peso. This is a phenomenal trade, guys. You need to be inside my Telegram by clicking the links. You guys can get access. These trades are what trading is about. Patience, 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 okay? Price sat on this weekly structure level for 2 days, but essentially price eventually moved, and this trade was sent out last week, okay? It was sent out last week on Friday, and look, today's Tuesday, and we've now been able to amass over 2,400 pips. Guys, if I break this down for you guys to really understand this, we've now pushed up into a level, into an area where we previously sold from. So I'm not selling this trade because I believe we could get some more strength, but there is reason for me to, potentially want to sell this. But nonetheless, it's not a coincidence that price has come exactly to where our TP was, and now it's pushing down lower. And this is also an area where we sold from before. If you guys remember before, the first USD Mexican peso trade, we made over 1,800 pips. This one now we've made 2,400. So the proof is in the pudding, okay? What am I looking at now? You may ask yourself, well, right now, there isn't a move. I believe that if the US continues its strength, this should push up and come towards these highs. It should do that, okay? If we look at where price moves, so we're gonna move this swing high, okay, to this swing low, right? We should expect price to push back up towards the 17 handle. If we can get towards the 17 handle, above inside of this area would be better. If it doesn't, it doesn't, but I wouldn't be selling from here. Okay, I wouldn't be selling from here right now because it's Tuesday. We've had a reaction call, but this reaction isn't enough for me based off of the fact that when I looked at this pair, I took this pair based off of a daily position. We first was able to sell from up here back in January. Price came down. I gave you guys some intraday shorts, but off of a daily time frame, I would next be looking to make a daily trade off of this when it can come back up above the 62%. Off of a smaller time frame, because the spreads are quite high on this, I don't really like to give out too many peso trades, but I'll try my best, and I'll be sure to inform you guys inside the Discord. But when you make over 2,400 pips on a trade, you should never be in a rush to give it back, okay? Never be in a rush to give it back, guys, never. So the next pair I want to go over is gold. Okay, I'm going to go over gold and Bitcoin. Now, gold at the moment, I do believe, is on the way down. It's got a lot of room to come. Of course, if we check the weekly time frame shows us that we came down last week, and this week we could actually be bullish. This week we could continue pushing up higher, but with the news that's taken place throughout the week, which I didn't show you guys. I didn't show you what's happening throughout the week, so excuse me, okay? Tomorrow, we have got the FOMC and the Fed interest rate, guys. I don't know why I'm clapping, but the Fed interest rate, okay, if you're watching this now, throw some clap emojis inside the inside the chat, okay? Shout out to those who are on the live stream. But the Fed interest rate is taking place tomorrow. That is going to be huge. That is going to be huge, okay? We've also got initial jobless claims, and we've got the Bank of England interest rate tomorrow on Thursday, and we've also got the Bank of Switzerland, the Switzerland National Bank interest rate. So guys, this week is due to be crazy. It's due to be phenomenal, okay? We've got Jerome Powell speaking tomorrow, as well as him speaking on Friday, and we've got a lot of US news. So I'm not looking to make a move with the peso as of yet, because, or should I say, I'm not looking to short it, because there's so much news coming out for the United States that I wouldn't really want to try to foresee something happening. But when we think about the gold now, if the dollar pushes up, this has to come down. This is what you would be thinking, right? But the Fed have had an invested interest in keeping certain markets high, in keeping the gold market high, in keeping the stock market high. So because of that, it's really hard to make any type of decision on gold. I'd just rather stay away from it, guys. Until gold can come back down beneath $2,100 an ounce, I'm not looking to trade this. I'm just not looking to trade it, okay? Bitcoin, however, Bitcoin has been doing some serious bits. We did, of course, reach a new all-time high, just under 74,000 last week. Today, we're at 64,000. So we've dropped down $10,000 in the space of a week. And I think Bitcoin could keep coming. The weekly looks really nice here. It looks really nice to see prices come down at least beneath 59,000. I think an appropriate area to start buying Bitcoin again would be around 50 to 60,000. Okay, but with that being said, you can't be surprised if we do get a major push back down, more down towards the 48,000 area. Like it shouldn't be a surprise. Bitcoin has had a parabolic shift up. It needs to have a parabolic drop down, okay? Things that fly up always come back, and that's what we call a pullback. So with Bitcoin, I'm actually looking at shorts. I've been looking at shorts over the past couple of weeks. I actually got a video that I'm going to release soon as well. I flipped an account from £10,000 to £20,000 just trading Bitcoin. So stay tuned for that, guys. But Bitcoin right now for me is working out really nice. You know, from a technical perspective, Bitcoin is not doing too much. It's doing things that I enjoy. It's playing out into areas, it's reacting, especially on the smaller time frames. I think Bitcoin on the smaller time frames is doing really juicy stuff, guys. I've got a lot of eye levels on the smaller time frames because I've seen a lot of cute reactions. So I'm definitely going to be selling out some trades in Bitcoin this week. My overall projection for Bitcoin, I need it to come down. I need Bitcoin to take this liquidity below here around the 59,000 area. So yes, Bitcoin could still push up. I would only short Bitcoin right now from around 67,300 for it to come down, because we are currently on a line graph. We have broken the bullish structure, ladies and gentlemen. We've made lower lows and lower highs. So now we're just waiting for that lower high, a Fibonacci retracement, and I can show you guys here. Fibonacci retracement, where are we? Here, down, high to low, where are we? High to low, okay, this one here. Okay, this is the retracement here, okay, and you can see that this candle is sitting right inside of that G spot, sweet spot, that same spot that I talked to you guys about. That is exactly what we can see here with let's change this, let's change the style. Okay, so this same daily candle, 4-hour candle, excuse me, we're going to use this candle as a lit block. Some of you formerly know this as an order block. This is going to be the area. This is the order block where we want to be selling from. We want price to push up into this area so that prices can actually come down lower. So until that happens, guys, I will not be trading this, but I will send out a trade for this, okay? Depending on what price action does. I'm not just going to send it out because price comes there, because Bitcoin has a tendency of just pumping through areas. But price might pump through this area, but before the candle closes, might decide to come back down. So we're going to be patient, and we're going to wait to see what happens with this one. I want to now show you another one I'm looking at throughout the week. US30. US30 was a really nice trade last week. Man, with US30 last week, how many pips did we grab? We grabbed 300 pips with US30. US30 done its thing, done its dang. Now, of course, the market's been really choppy with US30. You know, it's really choppy. It's continuously making new all-time highs. So I really would prefer to stay away from it. And on the smaller time frames, we want to see what can happen. Now, price has pushed up today. Of course, the liquidity, you know, has been grabbed. price could potentially still push up. But if I was to sell this, I would sell it from here. Okay, if I was to sell it, I would sell it from here. But I'm staying away from this. Okay, I'm staying away from this because I actually use other factors to help me understand if I should be buying or selling the stock market. So I'm going to stay away from that for now. I'm going to go over the bonds, and that's going to be the last thing that I leave you guys with, because we're pushing 20 minutes into this video. So if you're watching this right now and you've managed to get here, I really appreciate you guys. Just simply drop a like. It helps improve the algorithms. It helps people come across these videos. But the bonds have been in the same place. They haven't really moved. Okay, if we go on a weekly charts, the bonds came down. Okay, now it looks like we could be pushing up to come back down. If we look at the yields, the bond yields have been pushing up. So guys, if we're going off of what we potentially believe the direction for the bonds to be, which is down, that would mean the US dollar would also be coming down too. Now, if the US dollar comes down, which also, if we look at it on a weekly here, it doesn't surprise you if it does come down lower. Okay, if it comes down lower, then of course, you know, when we think about the interest rate being released throughout this week, if this comes down lower, we're going to see gold continuing to rise. We're going to see all of the majors continuing to rise as well. I was really annoyed with my majors because I wanted to take some shorts and send these out, but unfortunately we couldn't catch them. I sent out a Euro USD sell today. A Euro USD trade today. Excuse me. Shout out to those in the chat who got that trade. The Euro USD trade was a nice one. Something small, but something to whet the appetite, of course, to start the week, because we've got a lot of news taking place. And yeah, guys, you know, when I look at all of these majors right now, they're all in ugly areas. So there probably won't be a trade on these pairs for quite some time for me. Okay, there probably won't be a trade on these pairs throughout this week maybe, but we're going to be checking on the smaller time frames to see what happens, to see if we can tackle some. And as always, guys, I'm going to keep you lot informed inside my communities. I've got a premium community and I've also got a free community. At least be inside the free one so that you guys can get a further insight to what I do, how I do it, and how it can benefit yourself. I'm doing live trading streams and Q&As with people that are simply just inside of my free community. So don't miss out on those. Be sure to like, subscribe, and if you haven't already, be sure to smash the like button. Smash it right now. Smash. Okay. Also, massive shout out to Arsenal. You know, we're in the quarterfinals Champions League. It's been a long time coming. So if you guys are Gooners, up the Arsenal. Let's keep it going. Come on, you Gunners. And remember, every day is money day. Peace.